All right. Brenda, welcome to episode 3 of M&A Therapists. We don't have Chris today. He's in Florida for spring break, but you are filling in today. Obviously, you are not on the deal team, but you are a very integrated part of the Rowan execution side. For our viewers, why don't you just give us a quick background about you, what you did prior to Rowan, where you started, how many clients you're working on at Rowan, and what you do for them?
Well, thank you for having me, Jude. Let's see. Well, I started in what they call industry, which is just working in the accounting department, first at a private company. And then I moved on to like a publicly traded company back in Maine, where I'm originally from. And then decided I wanted to get my CPA. So I went back to school. And then I went to Indiana University, then to Chicago to work at PwC, one of the big 4 accounting firms, on the auditing side of things. And then came to Rowan in November. And I've been here almost 6 months now. And I'm currently working on 5 clients. Each client is very different. So working on a couple of different things. For one of my clients, kind of had to go through 2025 and clean up their transactions, make sure things were going to the right place. And for one of my other clients, I am helping them transition from desktop to QuickBooks Online. For another client, they're currently they have 2 separate businesses, but they're accounting it in just one QuickBooks, but they want to keep it separate. So right now working on transitioning over to making sure they have 2 separate accounts for that. Then for one of my other clients, we are also trying to do the transition from QuickBooks Desktop to online. Afterwards, I think we're just trying to set up the month-end close process for each client, have monthly meetings with them to have like budget forecast, all those things that are kind of missing in their current processes.
Okay, great. So clearly you're not on the deal team, on the execution side, on the investment banking team, right? So you're kind of in that prep phase for our clients that want to sell, but are not ready to sell today, but they're willing to work with Rowan and you for let's say the next year to 3 years in order to successfully get through a sale process, especially the diligence process, because it seems like in that current state, they would not get through diligence. Does that sound accurate to you?
Yeah, correct. So I'm
Okay.
kind of working through the books, trying to make sure, looking through historical transactions. I've seen quite a few things where it's like, in their AR accounting, in their AR aging, for example, they have things that have been there since 2012. And, we want to make sure that those are things going to be questioned when you go through due diligence. And we want to make sure, is this actually truly collectible? And if it is, what are the actions that we're taking to get that collected? Or at this point, is it even worth the fight? Like if it's $100 receivable, let's just write it off, be done with. We want to keep the AR aging and AP aging pretty clean, because then it's going to be less questions during due diligence.
Sure. One thing you said earlier was most of these clients seem to be on QuickBooks Desktop, which is an on-premise software, right? So that means if I'm in Chicago and our clients in, Maine or Pennsylvania, I can't access their software from this office, correct? So you are helping them transition from that on-prem software to QuickBooks Online. And it seems like most of our clients need that transition help. How difficult has that transition been? And before that, why should they transition to QuickBooks Online? And especially, how does that help with the sale process, you think?
I think, first of all, it's more of a cloud-based software. So it's helpful in that sense. You can access it from anywhere. So that's kind of like why we're kind of pushing them towards that, because then we can kind of take a look at it. If they're going through the selling process, other people can kind of take a look at it, access it without them having to like pull the reports and all that stuff. And for me, especially, it just makes it easier because then I can go through and check everything and be like, okay, I'm seeing something's missing here. Let me go through and like I can actually find it. Versus on desktop, I need them to pull like different reports. Sometimes the reports are different versus desktop versus online. And then some of the reports are not as easy to export from desktop versus online. So for example, like a vendor spend report, that's not as easy to do on desktop as it is online. So there are certain reporting capabilities that are a little bit better online. There's also more updates that are done more frequently on the online because QuickBooks is investing quite a bit in terms of like putting more AI features, just putting more features to help the workflow better and help people save more time in terms of their bookkeeping and accounting.
But yeah, and I agree with you. Like, so, one of our clients right now is going through a sale process, and they have QuickBooks Desktop, and the server is in their office, and this deal has been going on for about 9 months now, and obviously the buyer is asking for certain financial information and roll forward documentation. But every time he requests that, I have to ask the seller for it, and then wait for them to pull the reports, and sometimes it's not pulled correctly, then they had re-pull it. So there's like it's a frictionful process that drags on, and there's a time aspect to it. And obviously from on your end, because you're helping them prep, you need to make sure GAAP accrual accounting is fulfilled to a certain degree. If you had to wait for them to pull accounts, I don't think you'll be able to solve these problems in a fast manner, right? Because they're pulling in the P&L and balance sheet and the GL detail, but you want to dig into more things, and now you're asking them to pull more reports, and it would be an endless back and forth,
Yeah,
I feel
exactly.
like.
And sometimes like the reports, you have to know the specific name to get the specific information. And not all the reports have the same info. Like if you look at an invoice, it tells you like in the item description, any memos, things of that nature. But if you just pull it from like a transaction detail report, it just tells you the customer name and the amount, but it doesn't give you like the line item detail. And so sometimes those things are important to take a look at to see, okay, what's going on here? Like they want that information in the new like online version. So I think it is important. And that way I can dig into it and I can be like, okay, once you click on it, it like gets you all into the detail of what's happening. Um, versus desktop is just, I can't access it.
Yeah, unless you have some kind of like maybe like remote access software like TeamViewer or something like that. But even that's too cumbersome and not as efficient. Okay, now these companies that are on desktop, who is doing their bookkeeping? What type of person is it, and what type of background do they typically tend to have?
What I've seen so far is that typically it's someone in the family that's doing the bookkeeping, or someone that's been with them for years, since they started. It was either a family friend, maybe typically they don't have an accounting background. They're more just, they learned what the transactions mean. They kind of ask the owner for some help, and then they kind of work there together to kind of understand what's happening in the business. But they don't necessarily always follow the GAAP rules. Mostly, even though they're using accrual accounting, some of it's kind of cash based and mostly used for like tax purposes versus like actual accrual accounting. And also, in terms of, I feel like most financial statements that I've seen are to minimize their tax liability versus trying to maximize their earnings, their net income, which is helpful in the valuation process.
Yeah, so you're saying these individuals that are doing the bookkeeping, they don't have an accounting background, and they're somehow a related party. So if you were to ask them like a really accounting based question, like or a journal entry or debits or credits, are you telling me they wouldn't know how to answer those questions?
Yeah, typically they have like a CPA or someone separate. Like usually like their tax person is making like journal entries. Sometimes they do hire like an outside source to kind of go through, make some year-end entries. Um, but that's at the end of the year. So sometimes these things can be lingering where it's like they don't really know what's going on. They're just kind of leaving it. And then year end comes through when during tax season, then uncovers certain things where it's like the CPA is like, hey, this is, we need to figure out what's going on here. Let's fix it now. And I feel like you need real time data to make decisions.
Right.
And if you're waiting that long, if you're waiting a whole year plus like 4 months, usually like they file in April, um, you're not having the right information. For example, one of the clients that I'm working with, they had some deposits recorded as income. And really, those deposits should be matched against the bank transaction, against the payments that were already recorded. So these are deposits that were applied to invoices that were already recognized in either like the previous year, the past month or so, but they're also being recorded as income. So it's double counting it.
It's double counting the revenue.
Yes, correct. So then it's showing you that you're making more money than you actually are. And so then you would be paying more taxes on that, which is not good.
So let's say, one out of five clients that you're currently working on was to go to market and run a competitive M&A process with a bunch of strategics and financial buyers that are sophisticated enough to do their diligence in a professional manner. Do you think these companies would be able to get through diligence without some sort of retrade?
I don't think so, no.
No.
I think the I think when you get in the mix of like operations, because I mean, most of these owners, they're out there trying to make sales. Like they're also trying out there either working as well. So if they're working in like steel manufacturing, like they're out in the fields doing work or they're out in the fields trying to get more work. So they're more focused on that, not necessarily focused on like what's happening in the books. Is everything pretty clean? Is there anything that's like sometimes I just see entries that just don't make any sense. Like there's debits and liability accounts. Which naturally have a credit balance. And so things like that, where if you're not paying attention, these could amount to things that impact your valuation at the end of the day.
Right. And you're over here talking about liabilities and it's on the balance sheet. I'm pretty sure most owners don't even look at the balance sheet. At most, they'll probably look at the P&L and see what the revenues and bottom line is. But it seems like most owners run their business just based off of their cash, like cash account at their bank.
Right. Yeah.
Determining, all right, I have enough cash to make payroll, and this is good enough to maintain the other expenses and for me to take out some money. But there is no real strategic cash management going on, but just more of so, they're not, rightfully so, not financial people, right? They're more so operators. They run the business. They know how to sell, but they're not over here trying to make financial strategic decisions, unless they have a competent CEO, which sounds like they don't. They typically have a bookkeeper who is not
Mhm.
in finance or accounting. Okay. What are some crazy personal expenses you have seen that are being run through these books that you have, dug into the last 6 months?
Gambling in Las
Gambling
Vegas.
losses?
Yeah. Or at least they're gambling money
Gambling money.
in Las Vegas.
Okay. Running
Uh,
through the operating expense section as a,
yeah.
okay.
As a cost.
And how did you find that?
Well, it's just taking a look through the detail. Like I was just trying to separate, okay, what's a business expense? Because a lot of these companies, what they do is kind of bucket all the expenses under gross profit. And what you really want to do is try to make sure that you know what your cost of goods is to get like a true gross profit. So in doing that, uncovering like, okay, is this true like overhead or is this something that like needs to happen in order to make the money, make the revenue? And when I was going through that, I look at this and I'm like, okay, this is travel. Typically that's, overhead. Like that's more of an operating cost down below the gross profit line. And I look in there and I'm like, oh, this is Las Vegas. Let's see what this place is. It's a casino. And I'm like, okay. And then I asked the owner, be like, hey, like, is this like a conference or something that was occurring that, maybe was meant to like bring in more clients? They're like, nope, that's some gambling. And I was like, oh, okay. Okay, we're gonna put that over to like the owner distribution um, side of the balance sheet there. Let's see. I've seen some very expensive flights
Okay.
to Hawaii
Business class?
business class. I'm assuming. I mean, it's $4,000 so per flight.
Okay. Somebody bought diamonds, if
Oh
I'm correct.
yeah, oh yeah, that's right. Yes. So I saw someone that they spent $20,000 on diamonds, Diamond City. So whoever's getting that must be very happy. But it's like things like that where it's like you want to keep personal and business separate. Because I mean, especially during due diligence, like if they see that, they're just like, I think they lose a little bit of trust, wouldn't they?
Yeah, exactly, right? And when again, they're trying to maximize from a tax standpoint, right? Make their tax liability as small as possible. But, one thing is now it's going to affect you during due diligence. And then second, you're not getting the full view of your business's operating profitability, because now it's like commingled with personal expenses. So like you really don't know how profitable your business is.
Yeah.
Like you can't make strategic financial decisions because your income is being commingled, right? So it's like two items that are going against you. First, you're not going to get through. Well, it's gonna be a tough time for you to get through diligence. Second, you don't know your true operating profitability of your business. So in return, it's hindering maybe your growth,
Mhm.
your expansion efforts, because you don't know if you can hire 10 more individuals because you just don't have the data to back up that scenario, right?
Mhm.
Okay. And so let's say they did have these personal expenses when they were onboarded with you
Mhm.
in 2025 or in 2026. How do you make sure those expenses don't continue into the future because of those how do you make those bad habits go away so that we're in a good position going into the M&A process, and in a better situation to get through diligence?
Mhm. I think part of it is having a budget because that way you can kind of see every month, take a look, okay, what are my actuals? What are the budget? And if it's like over a certain amount threshold, then it's like, okay, let's take a look into that to see what's kind of happening. And then you can kind of tell uh if is this a true business expense or is this something that was accidentally put over into um into the it's a personal expense, but it was put as a business expense. I think also it's important just to have a conversation with the clients because I think if you frame it in a way of like, hey, you want to be able to defend your numbers. So you need to change your ways in terms of that. Just like, hey, if it's a personal expense, you have to put it either as a separate account on the balance sheet where it's like you're going to pay it back to the company, or you put it as like an owner distribution where it's like it's not hitting the P&L. And that way you can kind of make sure that the P&L is a true source of like, hey, this is what I'm making. This is how much it's costing me to make this money. Because ultimately that's important for you to make decisions on that.
Okay.
And I think it's just about having like monthly check-ins, just kind of checking the numbers. Vendor per spend could also be something because if, for example, you're going through the vendor per spend per month, you're seeing your top vendors. If you're seeing a line, Diamond City for 20,000, then okay, this is not a diamond industry. Let's take a look to see when that happened, why that happened, and let's move it over because it's more than likely to be a personal expense.
So obviously these are behavioral changes you are trying to correct, right?
Mhm.
And how receptive are owners to these changes initially?
I think initially it takes them a little bit of time because they're just so used to it. Again, ultimately, they're trying to reduce their tax liability. So they try to run as much expenses to the business as they can. And they have a hard time kind of thinking it through. But when you set it up in terms of like, hey, you're going to lose money in the future if you don't do this now, they're typically a little bit more open to that. Because at the end of the day, they want to retire well. They worked really hard. This is like their baby. They worked really hard, put a lot of time and effort into this company. And so they want to be able to show to a potential buyer, this is how much my company makes and is worth. And it should be worth this price. And in order to prove that, they do need to kind of fix some of those habits, make sure you're maximizing your net income as much as you can.
Okay. So clearly, you have 5 clients, a lot going on. You know, Explain to me some tools that you currently use to make your life a little bit easier, right? In order to run reports, do analysis. Obviously, we have our in-house product team. Maybe you can talk about that a little bit. Just give me some examples of third-party tools on the internet that you're currently using to help with your.
Yeah. So for the transition over, when we do the transition from desktop to online, depending on whether we're doing historical or not historical, we do need to at least bring the detail of the items that are outstanding as of whatever date we decide to do the conversion. So if we're doing it as of 12/31, we want all the open items. So you don't want to enter that individually because that's going to take quite a bit of time. So I've been using Sasant, which has been working pretty great.
What is it?
Sasant,
Succinct.
Sasant Pro Transactions. It connects right to your QuickBooks Online, and you put in all the data in there and imports it, and then you can double check it to make sure everything went through, but it works pretty smoothly. So for that, um, it's more for the transition from desktop to online. And then for reporting, Fathom does create some pretty nice reports, some nice visuals to kind of show what the changes are between year over year or budget versus the actuals. Um, let's see. And then Claude is another one that we use quite a bit, which the product team helped us out with making some skills. It helps with quite a bit of any type of reporting. So, for example, the other day I used it to make a debt schedule for one of our clients. Give it a little prompt, and then it came out with this really nice looking schedule. And that way, that's something that the client can use going forward because they do have a lot of debt. So they want to keep track of that. And right now, they're just not keeping track of it.
Okay. So on that Claude, right? So let's say you had a one-off scenario where, you were doing this process manually from multiple clients. Have you ever gone to the product team that we have in-house to build you a custom tool or skill or, maybe like an OCR um, product to help you with
Oh,
these manual processes?
yeah, for sure. Especially like when it comes to like bank statement reconciliations or even, for example, I did like I used ADP payroll registers to kind of determine what is the direct labor and what's admin. Because currently all the payroll expenses are just kind of going through one line, but I can't tell exactly what's going towards the project versus what's going towards just admin, who's doing accounting, sales, etc. So I used Claude and the OCR skill that the product team built to kind of read the files. And then from the files, gave it a little prompt in terms of like, hey, if you see this name, this is direct labor. If you see this other name, this is admin. Then it's separated it for me. And that way I can take a look and be like, okay, I see these. And then they match whatever the ADP payroll register report said. So at the end of the day, like I'm always making sure that it does match that. But it was very helpful in that sense because that would have taken me days to do manually if I wanted to go through each separate line. So it's definitely a time saver.
Right. So you're using the product team and all the tools that's out on the internet to help you with your job so you can do it in a more efficient and effective manner than doing it the old school way. Great. So obviously your services costs money on a monthly basis, on a retainer basis. So if you were to sell your services to a client, how would you justify the cost they pay per month to the value they'll get at sale? Like, are they gonna get any value if they go through you for the next 2 years of really professionalizing their financial reporting side of things?
Mm. I've seen that quite a few of our clients do have like a bookkeeper or someone in house or they're outsourcing someone. But what I've noticed is that while they are doing a good job in terms of keeping everything clean, of like making sure the bank transactions are being recorded, things of that nature, they're not really taking a look at like, is this expense something that belongs to cost of goods? Is it an operating expense? And then they're just kind of putting the numbers. And that doesn't really give you enough information to make a decision. So for one of our clients, it's the bookkeeper is doing these things, but he has a lot of debt. And so that's something that it's like, hey, you have a lot of debt, you need to figure that out. And he's not breaking even. So you're looking at his net income and he's down 60 for the year so far. And you need that information in order for it to tell him, hey, you need to make this amount of money because these are all your fixed costs every month. You need to make at least this to break even, and anything above that will be like profit. And so it's like, that's not something that the bookkeeper is telling him. That's something that we're going to tell him. Like, hey, this is your metric, what you need to meet. Because sometimes that's what they need. They need just very clear, I guess, suggestions.
Guidance, in a way.
Guidance, yeah.
Yeah.
Guidance to make decisions because they don't have time to look through all the numbers and go through all this stuff.
Yeah, because at the end of the day, the bookkeeper is just a data entry person. They're
Yeah.
not providing you strategic finance advice or any type of FP&A. It's just data in, data out, and there's no insights to derive, right? Like you said, they're down 60K in their net income, but no one's really coming up with a plan for the owner to be like, all right, how do we utilize our existing cash to bring down some of our, leverage, right? Debt, right? So there is no plan in place. It's just shooting from the hip almost. And the owner's just too busy to spend half a day to figure this out because they're out there selling or working in the business
Yeah, I mean, they're out in the field,
or in the field all day.
typically working. So it's, I mean, they don't have the time to really think through that, trying to think of like, hey, I'm paying a bunch of interest in credit card, but instead of why don't I just pay off the credit card payment? I have enough cash in my checking to do that, and I have enough to cover any future expenses that are coming. So it's like things like that, like actually being intentional about cash flow too. That's also very important to these clients because they need to make sure they have enough money to cover all their expenses. Plus,
Yeah. So your team is able to help with that financial decision making, put a plan in place, and improve the operations of the business because you're kind of taking off that load off of the owner and providing those insights on a weekly or biweekly, monthly basis as needed, right? And you're putting a plan in place, and you're following that plan through the next 12 months.
yeah, exactly.
Okay. Tell me about the company that is quite large and works in the construction management space, but you were able to improve their EBITDA by going back a year and really, cleaning up the personal expenses since that was excessive in nature. Can you just, tell me about like where was the EBITDA and where is it now, and what happened in between?
I think their EBITDA was one 1 million, around 1 million. And part of the problem is that they didn't have their credit cards linked to their QuickBooks Online. They were already online, so that was great. But they were just kind of entering the co- they were entering the credit card payment and then to whatever payments, whatever expenses were related to that specific credit card payment. So it was going to travel, entertainment, meals, etc., whatever it was used for. But there was no detail as to who were they paying, like what vendors were they using, specific dates. Because like sometimes you're paying a credit card payment, but that credit card payment is for, transactions from back in January, from back in December. And so to understand truly like what are the true costs for this current year, I had to go through and like upload those transactions and go through them and be like, okay. And now that you have all that detail, you can do it like a vendor spend report where it's like, I know I'm spending like $30,000 in DoorDash. I know I'm spending, another 20K in Southwest Airlines. Once you have that detail, you can take a look and be like, oh, maybe I'm spending too much money at DoorDash. Maybe I'm spending too much money in Chipotle. Like before, they didn't have that visibility. And then you could see, hey, there's all these and that's where I uncovered when I was matching all like the credit card payments and everything, that there were a lot of credit card payments that weren't to either of those business accounts. And that was about $750,000. What was happening is that the credit card payments weren't being matched correctly to the expenses based on which card was used. And so we had all these kind of random payments and no one really knew, hey, who are these going to? What credit cards are they paying? And really at the end of the day, even though the 750 was recorded as expenses for the business, it was more personal in nature. And so that increased their earnings by 750.
So after that cleanup, so you said they started at 1 million when they first onboarded with us.
Mm-hmm.
Where did they end up at in terms of their earnings after your cleanup and uncoverings?
I would say probably around 1.9.
Okay, so about a million EBITDA was added
Yeah,
to the bottom line.
because there are also a couple of
Yeah.
expenses, because once you have the detail, you can tell exactly like what's personal versus what's business, especially, going through all their transactions. I quickly pretty was able to understand like what typical vendors they use. It also tells you like the city, so you can tell, okay, this is from Pennsylvania. So let me take a look at all Pennsylvania. If there's any other places, if it's like international, but they're not an international business, they don't do really work. And I know that's like more of a personal expense.
Hmm. So Okay, so you basically uncovered about 1 million in personal expenses that were untraceable, basically,
Mhm.
just the way they were doing bookkeeping currently, you're saying.
Correct.
So, I mean, that's quite a value add, right? Because let's say they went from 1 million to 2 million, right? So let's say for easy math, the multiple is 5, and they were selling today, sorry, a year ago before they even onboarded with us, right? $1 million in EBITDA times 5, they're getting 5 million for the business.
Mhm.
But basically, you were able to really work the last couple of months to document these personal expenses in a solid manner and have all the backup needed. So really their EBITDA is, correct normalized EBITDA is 2 million. So really the value just based on that math is 10 million. So your service basically added 10 million, sorry, an extra 5 million worth of value to this business just by cleaning up their financial reporting. And the reason that is so important is because let's say we're in a diligence process on the investment banking team, right? Like we can do all the work to uncover these personal expenses, but you know with great buyers and sophisticated buyers, typically they're not just looking at one company that is selling. They're looking at numerous companies. Sometimes private equity firms are looking at hundreds of sims, and they're putting 10 LOIs and signing with one. Right? Obviously, you can see the funnel like really scoop down. Right? And if they're looking at a company and they're like, oh, they're a million in EBITDA, but there seems to be a lot of personal expenses. The lift is too big for us to figure out what these personal expenses are to understand the correct EBITDA. They they probably won't commit the resources to do so because there's so many other good deals out there.
Right.
Other good deals that won't give them this much trouble to figure out what normalized EBITDA is. And they would just, go with another deal. And obviously, yes, as a seller, you are, the asset that they're really looking for. But there's a lot of assets on the market, especially in the low middle market, right?
Mm.
That are, competing against you. So how do we, like cleaning up your books is one way of standing out to these buyers that have a lot of options.
Mhm.
So yeah, I mean, what you're doing upfront is instrumentally valuable to the M&A process when they exit
Mhm.
your workflow. So
And I think part of it is too that differentiates from like other bookkeeping fractional CFO services is that, I'm working with Jude, Chris, and Sam from the deals team. So I understand, like I know what the due diligence process is. And I can kind of understand to see, be like, okay, like if we were to go through that process now, where would they find the holes? Because I'm going there and trying to look at the holes and trying to fix them before it becomes a problem.
right.
So it's more like preventative.
Great. Yeah, I mean, just to wrap this up. I mean, it's incredibly important what you're doing, and it's fixing the problem before it becomes a problem, and you're, uh, ideally, cutting the due diligence period by maybe a couple of months, right? From what you're doing. Let's say like the buyer needed 120 to get through. You're bringing it down to into 60, just because of the fact that you are doing all the cleanup work, and it's coming from the Rowan brand, right? They're going through the Rowan fractional CFO side, and then the deal team. So we have all the backup and support that's needed. So yeah, I mean, what you're doing is incredibly important, and I think a lot of low middle market companies need to go through Brenda before they sell. So. But yeah, appreciate the conversation today, Brenda.
Yeah, of
And
course.
yeah, looking forward to having you again
Thank you for having me.
later. Thanks.